So today we're going to go over the options table in the Thinkorswim platform, how to use it, and some tips and tricks that you might not know about that I haven't seen other videos talk about. So just to get right into it, this is your options table, right? And you're gonna get that from the trade tab. We're gonna be looking at Apple just because everyone knows Apple. This is all your strikes. All right, this is your date, 17th of December 2021. This is how many days till expiration, right? 6 days out, 34 days out, 160 days out until trading day. The weeklies and then the monthlies. And you can see here this is 22 because it's the new year, January 2022. On the far right, you have the implied volatility and then the expected move. So for the 17th of December, Apple is expected to move plus or minus $7.50. Essentially, it's going to go up or down $7.50. That's not a rule, it's just the expected move in a good price target area. So 6 days out expiration. This is how I have mine set up. All right, you have different layouts here. We'll just go over this. You have the bid and the ask. All right, you have the expiration and the strike. This is going to be the calls. This is going to be the puts. Anything that's blue is in the money, all right? These are in the money calls, in the money puts. Black is out of the money calls, out of the money puts. So make it easier. So this is, we're at the money here on the strike. So you have the open interest and the volume, all right? Open interest is how many contracts are just currently being held that have not been sold and they're waiting out there. Volume is how much is traded that day. So today 141,000 were traded at this strike, 38,000 at this strike, 25, right? So essentially it's a Friday, right? It's a Saturday right now. Monday when this opens, these will pretty much be at about 35,000, right? Because you'll just add the open interest, and volume will always be zero at the beginning of the day, and it will populate as people trade. So that's just how the train is the chain is set up. I like to keep my strikes at 50. You can come down here to all, and it'll show you all the available strikes for this current contract. I like to keep mine at 50 because it's just easier to see all of them. So I have mine set up like this, and if you ever want to change it, you can come to customize, and then you can add and put in or put out what do you want. If you want to add the Vega, you can add it, right? If you want to take it out, you can take it out. And then I want to come and show you this one thing here, right? Implied volatility, theoretical price, and probability of touching. So, and I'll show you how to add it here real quick. We'll go to customize, we'll type in probability of touching, all right? And I'm going to take off mark. So what is this? So theoretical price is essentially, you can see right now this contract, all right, the mark is 297. That's pretty much the mid price. Well, let's say you think Apple might drop $2. Type in -2, and then this shows you what the price will theoretically be if Apple were to come down $2. And you can see it'll be at 208. And you can see here what it's trading at 179 right now. It'll be about 177.50, and there's an 80% chance that this is going to get touched. All right, so that's what probability of touching is. It's letting you know that there's an 80% chance that it's going to come down and touch this level. Now I like this better for swings, because let's say you want to get like the December 31st Apple calls. All right, well, it's still in -2 here. Well, if you want to get the 180s, right now they're $4.95, $5. Well, it's gonna be $4 if it drops $2. If it drops by $2, and if you come over here, there's an 86% chance that it's gonna do that. So I might want to wait and put my price at 4 and see if I can get a better fill, because there's a good chance it's going to come down and tag this at least before going back up. So that's what I use probability of touching for in theoretical price. And you can do the same thing if you want to know if it's going to go up $2. What's this going to be? You can see it'll be 603. So if it goes up $2, you're going to make about $100 per contract. That's what that is. So spread here, if you want to do like a vertical, you can see it's got a 250 wide vertical, right? 180, 125. Now if you wanted to go $5 wide, you can come in here and you can change it this way, or you can come down to deep and wide, 1 month, 2 strikes. Now it's got the 180, 185 loaded in. I usually don't do this. If you hold the control key, you can press the 180, and then you can hold control. You can press the 190, all right? And that's how you select more options. And if you wanted to like do sell a put, right? You can do that, and you can change them like this, up and down, how many contracts you want to do. So that's that. And then you can change it here, and you have the type of orders, day. GTC is good till canceled. So if you put it day, if you don't get filled, it's going to go away at the end of the day. If you put it GTC, it means it's going to be a rolling order, and it's going to stay out there until you get filled, even if it takes 2 weeks. Let's go down and look at the option statistics. This is how many calls and how many puts were traded, and then the total. 3.1 million contracts traded on Apple on this day. All right, this is how at the bid or below, at the ask or above, and between the market. So this is good to see the volume. Now, the sizzle index, essentially what this is showing you is the call and the put sizzle. So if this is 1.0, this is over the last 5 days. If it's 1.0, it's saying that it's traded the same or neutral to the last 5 trading days. If this was a 4, for example, it would be telling you that 4 times the amount of calls have been traded today over the past 5 trading days, or 4 times the amount of puts. So being 0.71, 0.76, it's basically saying it's doing less than its normal call volume, less than its normal put volume. So I come in here and look at this on a trending day. If it says 2, 3, 4, 5, some stocks like Plug Power, like they might be 8 on really, really advancing days. 8 times a normal call, it just lets you know that they're really piling into the calls, and that's kind of the sentiment. And you can come down here to options time and sales, and this shows you all the contracts that are traded, and this is usually like the top, the biggest, right? And this says spread, so you can see it's 8,500 at the 125 call and the 125 put. So this is basically, they did a straddle. And you can come in here and you can change, let's say you want to see how many 5,000, right? Large orders 5,000 and up. And this shows you all the strikes that someone bought 5,000 contracts or higher. So this is a good way to see large option orders where they're putting heavy money in. I mean, this is a huge trade right here. 5,500 at 1,100 a piece, all right? And they bought the 170 calls, so, and they hit them twice. So that's like 11,000 times 1,000. That's a big order. Product depth, this just shows you pretty much all the series. These are all the strikes and the open interest. So if you hover over it, this is the 250 strike for January 2022. So this was kind of like, this is a way out the money, right? But there's 53,000 contracts in open interest down here on that 250 strike. So that'd be a huge move for Apple, but there's a lot of volume being traded. So that's good to see. Just if there's any wild puts or call orders, you can see like way out here, right? The June 16th has got 13,000 contracts for the 300 strike. I don't think Apple will hit 300 by then, but there's 13,000 contracts that think it might. So that's what that shows me. I don't use this too much, but it's there if you want it. And that's essentially it for the options chain. I mean, that's all the tips and tricks that I know. You can come here to Trade Grid too. I have a chart here, but if you click this, show gadget, maybe you want to look at like live news when you're looking at your options. And if you ever want to click this just does a pop out window. So if you want to put it onto another screen, you can pop out the options chain. And that's essentially it. Oh, the last thing, if you want to look at the options chart, right, you can click copy. I have it sending to a specific color code. So I have it in Active Trader here. But just to show you, all right, there's a regular Apple chart, but that thing we just copied, that's the actual option contract. So this contract, you can see this is where it traded. It opened up at $1.50 a contract, and it was low as 1.3, and as it went up, it went all the way up to $3. And this shows you the actual contract's price isn't moving. Now you can't chart this, all right? The option, that's what this is, right? This option is moving based on the Greeks, based on implied volatility, based on everything that's going on with Apple. So just because it's a candlestick chart, I mean, this purple line is the theoretical option price. So look at it more like this. Don't start drawing in, don't use indicators and EMA lines and support and resistance. This does not exist. This is just a measurement, right? This is showing you the cost of the contract. There's no head and shoulders patterns on here. This option is moving because of the Black-Scholes model, or the Brooks and Stenson model, right? The math equation that drives options pricing is determining how much this is going to be worth. So it's a reading, like the VIX, can't be charted. So that's what this is. And if you want to come into Active Trader, you can actually trade, right, buy and sell the actual option contract if you wanted to be quick about it. Just like you can active trade on stocks, you can do it on the options. And that's how you do that, right? So I think that's it for all the tips and tricks. Let me know what you think. And yeah, I'll see you in the next video.